All right, so today we're diving into one single stock, BMNR, that is caught in a fascinating battle. You've got this incredible long-term promise clashing with a frankly terrifying short-term reality. So, is this the super cycle everyone's been waiting for, or is it just an elaborate bear trap?
So let's just start with the number at the heart of this whole thing, $1.5 million. It's that massive bull case price target for a single Bitcoin, the one famously thrown out there by Cathie Wood's ARK Invest.
Now look, could that really happen? We could debate that forever. But what's really interesting is how people are positioning themselves to profit if it does. And today we're looking at a stock that's basically built to ride that massive wave. But here's the catch. It amplifies everything. The gains, and yep, the pain too. Okay, so let's introduce our main character, BMRL. It's a digital asset infrastructure company. They specialize in crypto mining, and it's become a super popular way to get exposure to the crypto market. But it's not just any old proxy. This is what traders call a high beta play.
Okay, high beta, what on earth does that actually mean? Well, in the simplest terms, it just means the stock moves, like, way more dramatically than the thing it's tracking, in this case, Bitcoin. So you get these huge swings up. But, and this is the crucial part, you also get these huge swings down. We're talking way more volatility, a lot more.
And that right there is this multiplier effect we're talking about. This is why the risk takers absolutely love stocks like this. I mean, the data we're looking at has shown that if Bitcoin moves up, say 10%, BMNR could just rocket up 20, maybe even 30%. It's built to pour gasoline on the fire.
So you might be asking why BMNR specifically? What's their secret sauce? Well, it really comes down to how efficient they are, and specifically, this thing called immersion technology. It's pretty wild. They literally dunk their mining rigs in this special cooling liquid. And because of that, they can run their miners faster and hotter than the competition. That slashes their energy costs, and when things are good, it just skyrockets their profit margins.
And look, if you want a sense of just how explosive this thing can be, just think about this. During the last big bull run, BMNR went from about $2 a share all the way to $161 in a single year. Yeah, that is a mind-blowing 6,000% gain. It really shows you the kind of, white-knuckle ride you're signing up for with this kind of stock. Okay, so that's the bull case. But this is where the story takes a sharp, and I mean sharp, turn. We have to pivot from that beautiful long-term dream to the kind of scary, right-now reality of its price chart, because let me tell you, it is not looking pretty at the moment. All right, let's take a look at this chart right here. You see that recent closing price? $28.31? Now, the reason traders are freaking out is because that price has slipped just below a really critical support level, that 200-day moving average, which is sitting right there at $29.52, and in the trading world, that is a huge red flag. So why does everyone care so much about this one line on a chart? Well, you can think of the 200-day moving average as like the long-term heartbeat of a stock. When the price drops below it, all the technical traders and even the automated trading bots see it as a sign that the long-term uptrend is broken. And what does that do? It can trigger a whole new wave of selling.
And, as if that wasn't bad enough, there's an even scarier technical pattern that might be forming on the horizon. It has a pretty ominous name, too. The death cross.
And no, it's not just a cool, scary name. A death cross is a very real, widely watched pattern. It's what happens when a short-term average, like the 50-day, literally crosses down below the long-term 200-day average. It's basically the chart screaming that the short-term momentum has totally collapsed and that a much deeper, longer downturn could be on its way.
Okay, but wait, this is where the whole story gets another twist. What if this whole price drop isn't real? What if it's not organic? You see, the analysis we're digging into here presents this really powerful counterargument that this isn't a real collapse at all, but a carefully constructed bear trap. So what exactly is a bear trap? How does it work? Well, the theory goes something like this. The big players, the institutions, they intentionally push the price down below these key levels that everyone watches, like that 200-day average. What happens next? All the automatic sell orders, the stop losses from smaller retail investors, get triggered. They start panic selling, and all that panic selling creates a ton of cheap shares, which the institutions can then just swoop in and gobble up at a massive discount. It's a classic shakeout.
So is there any proof for this bear trap theory? Well, here's the most powerful piece of evidence. While the price chart looks, frankly, awful, the actual on-chain data tells a totally different story. Remember, that's the public ledger of every transaction. you can actually see the wallets of the biggest long-term holders, the so-called whales, and guess what? They are not selling. They're holding tight. This really suggests that all this selling pressure is coming from the little guys getting scared, not from the big, smart money that's in it for the long haul.
So here we are. This brings us to the ultimate test of conviction, right? You've got two completely opposite stories playing out at the exact same time. How on earth do you reconcile that incredible long-term dream with this short-term nightmare playing out on the charts?
This slide just lays it all out perfectly. It's the whole conflict in a nutshell. On one side, you've got the 5-year dream, a $1.5 million Bitcoin, this institutional supercycle, all based on long-term conviction. And then on the other side, you've got the 2-week reality, breaking below key averages, the threat of a death cross, and just pure, raw short-term fear.
You know, with all this chaos and these conflicting signals, the analysis really boils everything down to one single number: $30. Analysts are saying that is the magic number. It's the level that BMNR has to get back above, and get back above soon, to kill all these bearish signals and prove that this was, in fact, just a bear trap all along.
And that brings us to this really powerful quote from the analysis. It totally reframes this whole price drop. It's not a crisis, it's potentially the last gift the market is going to offer. The idea is that this could be the very last chance to get in cheap, before that tidal wave of institutional money supposedly comes in and changes the game for good.
So really, we're left with this final question. And it's not really about charts. It's more of a psychological test. The sources are basically asking, if you believe in that 5-year roadmap, can your conviction handle this intense, short-term psychological pressure we're seeing right now at $28? Or is all the noise, all the scary charts, and all the fear, whether it's real or totally manufactured, going to be enough to shake you out of your position right before the next big move?